There are plenty of opinions on how to plan for a successful retirement. But the truth is, a lot of conventional wisdom doesn't seem to work anymore. Back with us today, Gary Mattson, Laurel Stewart. They are the father-daughter duo, the team at Mattson Financial, a full-service financial and retirement firm right here in the Grand Rapids area. Also popular radio show hosts. You may have heard them on the dial. Good morning, Gary. Good morning, Laurel.
Good morning.
Good morning.
Thanks for joining us today, talking retirement. How can we be sure that we're doing the right things now, that we're on the right track in preparing for retirement?
I think that starts with, having a checkup. A lot of people may come to us and just don't know how they compare. They've talked to their coworkers or friends or family members, and they're saying, so-and-so is getting this in returns, and I'm wondering, do I have enough to retire? Am I on track? And so it's key to, first and foremost, dial in to your retirement. What do you want that to look like? Because my retirement and Dad's retirement are going to be totally different, right? Mom and Dad have their dreams, goals, and desires, and mine and my husband, we have different ones as well. So I might not need the same nest egg to provide me the income I need as they do. So it's just starting with a checkup, seeing how you are, engaging along the way, and giving us a call and sitting down with one of our advisors.
Everyone wants their nest egg to grow, right? Growth is great, more money, right? But you use the term protected growth. Why is it more important to focus first on that protection, and what does it look like?
Well, unfortunately, if you don't have protected growth and the markets go down like they did in COVID, 20, 30, 40%, that means that you're taking money out from a negative position or losses. And if you have losses in your portfolio, it's probably going to be really hard to regain those assets back to a position so you're not going to run out of money. So there's really two buckets you really want to concentrate on in our world. The one is the critical income need, the money you need every month to pay for your ordinary needs, electrical, housing, those type of things, utilities. And then the things you want to do in lifestyle, whether it's travel or maybe that you want to actually donate time to a nonprofit and do those type of things. Whatever that is, you want to make sure you have the money there to do that so that when the markets go negative, your income's not affected no matter what. And then when you have growth in the markets, we harvest that off or put it in a bucket for future things you want to do in the future.
And obviously, if it's protected growth, it has to be protected from something. So the risks or the amount of risks in people's plans. Talk about that.
Well, unfortunately, people don't realize that diversification doesn't mean just diversification of assets. Stocks and bonds, if you have just those in your portfolio, a lot of times we've seen it, and the list is getting longer,
right.
Different points from 2000 to 2020, they all go negative. So you need other assets in your portfolio like real estate, private equity, hedge funds, commodities, maybe even foreign currency, and then guaranteed assets. And then what happens is when those assets go down, we actually have a position where you can buy into it at a lower rate, and then as it comes back up, harvest that and refill the income buckets. So kind of think of it this way, is that if you never had losses in your portfolio to have income, what's your portfolio going to go and do over time? Well, obviously it's going to grow, and it's going to grow very effectively, so you don't have financial losses that you have to, what we say, take away from your portfolio in the future, so your portfolio is going to grow.
And once we have clients that go through this with us, they completely understand. And when we saw, what was happening in March of last year with the markets, we had some clients calling in and saying, Gary, Laurel, we're ready to buy in. We know we have this on the sideline. Is it time?
Yeah.
And so I love that they're really eager and they understand, buy low and sell high.
What we haven't said yet, and a lot of people think about when they think about retirement, is Social Security. Will it be there for that retirement? And what does it do?
Huge.
You got that dependable income and you got Social Security. What do those do?
Well, you're kind of a specialist for us there, Laurel.
And so Social Security, obviously, it's there right now. We want to make sure first and foremost that you're maximizing it. A lot of times people would come to us and say, I already elected my Social Security. That's already done. And so what we've really done is tried to explain to everybody that that's great. You might have an idea, but let's look at all the options because it's more than just about you. We actually should look at what's going to be left if you were to elect it at a certain age or time frame, what's going to be left after you pass for your spouse. And that's something that I don't think that advisors are communicating out there and talking about with their clients, because we want to make sure that if your spouse passes, You're going to receive a benefit still, but you're going to lose one Social Security. So now how much is that there, and does your lifestyle have to change? That's the worst thing, is knowing that in retirement you just lost your loved one and your lifestyle has to change.
Yeah, look at it from this point too. Not only did you lose a loved one, somebody who helped you do things, but you lose that income, but you also lose that tax deduction.
Right.
Now, to maintain the same lifestyle, you're going to attack your assets in a more withdrawal fashion so you can maintain where you're at. Now, is that going to push you into new tax brackets? So Social Security is a great benefit. We understand that, and it's going to be there, but it's got to be there for all the way through for both people, whatever that happens to be. And then how does it affect the other assets that are there? And are you going to run out of money because you're the one left behind?
So we want to optimize it as much as we can.
I am so happy that we have you to turn to, our trusted advisors, when it comes to this, because tax brackets and tax planning is something that, boy, a lot of us, I'm sure, I personally have very little idea on how that's going to affect retirement. Why is tax planning such a big deal?
It really comes down to the fact of when you're taking money out of your accounts. A lot of times you saved money putting into your 401ks, your 403bs if you're working, as a healthcare worker, and your IRAs. And so you've built up this beautiful nest egg. But if nobody's communicated, to you what your tax situation is going to look like, and you only have pre-tax dollars, now you take income out of those accounts to start enjoying your lifestyle. Well, now you have to pay taxes on it too. So are you paying 12%? Are you paying 22%? Hopefully we can look at things and make sure you're not overpaying in taxes. But that's why you need to have a strategy and communicating with your advisor and your CPA or your tax planner to make sure you really do have a holistic approach and it's working together.
Yeah, understand there's things we can control and there's things we can't control. We can't control the market, but we can control how we respond to it. But we can control our tax brackets. We can control our fees. So let's say, for example, you have a $500,000 portfolio and it lowers your tax cost by 2%, and maybe you get a 2% better return. Well, that's 4% difference every year. That's $20,000 a year difference that you could have in your pocket instead of going to Washington or someplace they don't even know what's going to do. And then that gives you more freedom to make choices for yourselves and your family.
Well, all of that sounds great, and I'm sure someone watching right now would love to talk to you guys, and you're offering a great special for our audience.
For the first 5 callers, if you've saved $250,000 or more for retirement, we'd love to invite you in, have a conversation with one of our advisors, and get started on your retirement plan today.
And remember that taxes are always going to change, so your plan's got to change with that.
Good point, Gary. I'm so glad we have Gary, Laurel, the team at Mattson. Wow, trusted advisors for us all. If you're at home right now, you want to learn more about being on the right track for retirement. Obviously, I learn something new every time I talk to these two. Mattson Financial has this great offer right now. The first 5 callers that have saved $250,000 or more. If you're retired or nearing retirement, there's a complimentary full-blown retirement plan waiting just for you. This allows them to sit down with you personally, get you a roadmap analyzing where you are right now, and discussing your best steps to really get ready for a successful retirement. A game plan to get you where you need to be. The number to call, 616-514-3831. Again, that's 616-514-3831.